Welcome to Darth Trader, where we bring balance to the force of trading. Today we're diving into the mysterious world of candlesticks. No, not the ones you use for dinner with Yoda, but the ones that can light up your trading galaxy. A candlestick is like a Jedi's lightsaber, powerful and full of information. Each candlestick tells a story of the battle between the bulls and the bears, the buyers and the sellers, the light and the dark side. Let's break it down, like dismantling a droid. A single candlestick represents a specific time frame, like 1 minute, 1 hour, or even 1 day, showing the price action within that period. The thick part is called the body. It shows the opening and closing prices for that period. Now, if the body is green, the price went up. If it's red, the price went down. It's as simple as that. And no, the colors don't mean it's a Christmas decoration, even though it might look like one. Now let's talk about these wicks. They show the highest and lowest prices for that time period. Think of it this way. The wicks are the extremes, showing how wild the market got before it calmed down and settled in the body. Reading candlesticks is much like understanding Wookiee. It's tricky, but ultimately very rewarding. Let's dive deep into why candlesticks are so important in the trading world. When you explore the intricate world of candlestick patterns, you'll be able to read what's happening with the price. There is no trading course or mentor that can truly replace the invaluable learning you get from watching live data and observing what candlesticks form over time. Even Yoda would agree.
Learn from candlesticks you must if become a trader you want.
That's where your true trader's intuition is built. As you start to gain experience, you will be able to read price intention, velocity, and narrative. It's like watching the Star Wars saga unfold, where sometimes the light side is in power, and other times, the dark side takes control. Creating a narrative with candlesticks and time frames means interpreting the stories that candlestick charts tell about market dynamics over specific periods. Each candlestick shows price action within a chosen time frame. For example, on a 1-minute candlestick chart, you'll see 60 candlesticks in an hour. On a 15-minute chart, there are 4 candlesticks per hour. And on a 1-hour chart, there's just 1 candlestick. They all contain the same information, but present it differently. Watching a lower time frame gives you more details about price movements, which some might find overwhelming and call noise. However, if you know what to look for and understand your trading style, this information can be valuable. For instance, swing traders focus on higher time frames like daily, weekly, or yearly charts. Day traders use middle time frames such as 5-minute, 15-minute, 1-hour, or 4-hour charts. Scalpers rely on lower time frames like 3-minute, 2-minute, 1-minute, or even 15-second and 5-second charts. If you don't know which kind of trader you want to be yet, you might find that your trading style will naturally choose you over time. But that's a topic for another video, so like and subscribe if you want to hear more about it. As you start to understand how this works, you'll see how analyzing patterns and time frames helps you discern the ongoing battle between buyers and sellers. With experience, you'll develop an intuition for reading price intentions and market narratives, much like understanding the unfolding plot of a complex story. This skill will allow you to anticipate market movements and make informed trading decisions, emphasizing the importance of balance and timing in successful trading strategies. So, young Padawan, now you know the basics of candlesticks. May the charts be with you, and remember, in trading, as in the Force, balance is key. The Force is strong with those who understand candlesticks. Happy trading. Subscribe to Darth Trader for more trading wisdom from a galaxy far, far away.